Welcome to Breaking Banks. Welcome back to Breaking Banks. I am your host, Brett King. You guys will have to put up with me a little bit today, as the guests will, because I've got a bit of the Rona. Round 4 of the COVID for me, and it's been a bit of a rough one, but I am slowly recovering and trying to keep the ball rolling. But we have a returning guest. Well, in terms of a fintech that's been working with Breaking Banks for a long time now, actually on a very second episode back in May of 2013, a gentleman by the name of Ben Milne, who was the founder of Dwolla at the time, came on the show and introduced Dwolla to the world. And here we are 11 odd years later, and we have Dave Glaser, the CEO of Dwolla, and Skyler Nesheim, who's the CTO, there joining us today to give us an update. Ben's been on the show a few times, but we haven't heard from Dwolla in a little while. So Dave and Skyler, welcome to Breaking Banks.
Thanks, Brett. Great to be here.
Thanks so much, Brett. Thank you.
Awesome. So Dave, just give us a bit of an update. What's Dwolla focusing on right now? What's the state of the company? What are you excited about? Just give us a bit of an update.
Will do. So Dwolla is focused on providing the most innovative interfaces to the U.S. banking system for innovators of all sizes. We know that there are dozens, if not hundreds, of startup fintechs trying to embed payments in their applications that are appropriate for and being built for all sorts of industries. But we also realize and see a very common occurrence that larger organizations are also innovating and even digitally transforming their legacy systems to take advantage of the U.S. banking system for things like pay by bank and open banking, to keep up with these smaller and more disruptive innovators. And Dwolla is providing the payments infrastructure and the open banking infrastructure for all of that innovation that's happening in the U.S. today.
Awesome. And what's changed in the last few years in terms of Dwolla's mission, or has it just got a sort of a tighter focus?
I think we've gotten a tighter focus over the years, and it has evolved. Certainly, Ben Milne, our founder, is still a board member and very involved with the company and a good advisor to Skyler and myself. He's moved on to other fintech startups as well. Yeah. So he's a brilliant guy. And his vision initially was to really bring costs down for individuals and small businesses to exchange funds in easy ways using the banking system and trying to get to the costs of that for free to small businesses, especially. In doing so, he and the team built out this terrific set of APIs and infrastructure that overlays the legacy banking system. And over the years, there's been a lot of evolution, as you pointed out, right? So sort of PayPal, Venmo, Square themselves have sort of innovated in that small business space and done very well. Dwolla continued to innovate to really bring the technology and the value-added services that we provide to more and more types of platforms as opposed to just small business retailers. And so that was kind of our secondary evolution, I'd say. And now we're almost into our tertiary evolution, or third version of Dwolla, where we're providing the similar solutions and really building them for scale to provide for large businesses and enterprises as well.
So this capability to pay by bank or to streamline payments, particularly for real time, is something we're seeing happening around the world. So as we were prepping for the call, the three of us were discussing the success of Pix in Brazil. About 80% of population has adopted that now. The fastest growing payments network in the world. You've got the UPI rails in India. I think it's something like 300 million monthly active users on UPI right now in India, and 80% of retail payments or retail commerce will go through the UPI rails in India by 2027, just a few years from now. Of course, we've had pay by bank real-time payments capabilities in much of Asia for a while now. I'm living part-time in Bangkok, where we have very high penetration of QR-based payments here with a system called Prompt Pay, which is paid by bank, and you can also use your phone number or a QR code or your bank account number for real-time payments in that way. So it seems like everywhere is we're seeing this massive injection because of mobile tech enabling as an interface, enabling sort of this bank payments capabilities. But the US is still sort of dragging our feet. A lot of people are still, yeah, we do have some same day ACH and we do have FedNow, but still majority of the payments are probably facing, that sort of still 3 to 5 day payment cycle stuff. And you've got the question of what's going to happen with the interchange basis for merchants if we're successful with pay by bank. And so there's all of this sort of debate as well as the federal versus state regulations and mandates, of which there are little. But why is it that the US sort of continues to struggle with this a bit in terms of this commitment to real-time payments, do you think?
I think at the highest level, it's the fact that we've built a payment system over the past 50 years that's worked pretty well. 80 trillion with the T dollars was processed on the ACH system last year. 55 trillion of that 80 was B2B payments. And then a smaller subset of that was retail payments. And frankly, we don't.
So it's sort of just momentum, right? It's just that momentum in the system.
I think it is. I think it is momentum in the system. And so pay by bank, as we think about paying for retail goods, either in store, at a shop, or even online with merchants that we work with, it's not easy today for us to enter our account numbers and routing numbers. We don't know those by heart. We don't have the check in our pocket, right? So we haven't built up those tools to make pay by bank ubiquitous in the US, like cards have become ubiquitous for retail payments. However, in these other countries that you talk about, right, regulators saw the opportunity to do that, the government regulators, and they issued these mandates to do it. Now we're in a more of a free market society, and the innovators are what tends to drive innovation. And we're seeing that start to drive now, but we're not nearly as far.
Hang on. I want to take exception with that because it hasn't driven innovation. We're at least 10 years behind China right now in the US. So the free market hasn't driven the innovation, right? Yes, you've got some pockets of it, but sometimes you just need to mandate standards, I think, and I think because the rate of technology is happening so quickly, if you don't do that, if you don't mandate those changes and you sort of leave it up to the free market, you get this sort of lag. At least that's my, there's another element too. It's also going to be a lot more expensive to retool the whole US payments, rail system than, other economies, because, your labor cost is going to be lower and so forth. But I mean, I don't know. What do you think, Dave?
I think you can definitely make the argument that a lack of standards has introduced a lot of competing standards and a lot of competing solutions.
Yeah.
And so that's led to a ton of complexity. And that complexity really challenges like business adoption and consumer adoption of these new tools and techniques, because it's hard to even understand, like, how do I piece all things together? And I've got to get it from 3 or 4 or 5 different providers. And each of them has a different solution or a different standard that I've got to adhere to in order to adopt an open banking connection or a pay by bank connection. It's incredibly complex for businesses.
I get that. But your mission to abstract that complexity from businesses is admirable, right? It's needed, obviously, because of that. Maybe, Skyler, if I can follow up with that, is if most of what we're talking about here is in order to be able to use these new tools, use these technologies available to us to build these efficiencies for businesses and merchants and so forth. At the end of the day, it does come down to technology implementation. And to Dave's point, we're dealing with systems that have been put in place and have been successful for many years. But at the same time, that means you are dealing with older legacy technology infrastructure. So how much of that is the problem? Is that you're trying to take, diesel powered next generation horse and carts and put jet engines on them, as sort of as an analogy? How much of it is just that the technology challenges are significant because of the massive investment in technology in the past?
And that's a place where a number of enterprises, let's call it mid to enterprise size businesses, I think struggle, is they have existing infrastructure and systems that they've built and invested in and put in place in order to interact and send payments today. And you might be the CIO or the CTO inside of another organization, and you're thinking about the technology that you use to wrap your bank in the US to pay ACH or something like that. And you see emerging open banking technology, or you see instant payment rails, and you think, gosh, like that could be a great value add for my business partners. But in order to do that, we've got to crack open a system that we haven't touched in 10 or 15 years.
Right.
And we, it's just hard to imagine being able to upgrade that system to interface with a real-time or instant payment.
And it might cost you $2 million, right?
Exactly. And so what we've focused on at Dwolla is trying to build a very developer-centric, easy to integrate platform. Another way to think of it might be an account-to-account payment gateway that allows a mid or enterprise business to essentially replace the tech stack that they have today and the connection that they have to their financial institutions or their payment methods with modern interfaces that are interoperable with their existing ecosystems and that are powered by all the emerging technology in open banking and instant payments.
Yeah. Dave, when we think about Dwolla's journey through this, I mean, you guys, we just talked about the fact, you were on the show back in 2013. And so, I mean, Dwolla's been around for more than a decade now. And, in that time, obviously the technology has advanced. So let me ask you, and Skyler, you can feel free to contribute as well, but clearly you've had to be continuously adapting and continuously innovating in this space. So, would you say it's easier for a fintech like Dwolla than a traditional bank to do that, and why?
The short answer is yes. And the why is I think mostly because banks are great at taking care of their customers' deposits and helping them manage their financials versus working with businesses and individuals on these really complex flows for payments. And that's what we've seen. We've seen banks trying to innovate in the realm of payments and money movement and open banking, but they almost always get in their own way, their bureaucracy, their size, their other priorities of handling deposits sort of just gets in the way of them being able to innovate fast, especially as fast as the innovators like Dwolla or our customers who are innovating even faster. And so that's where Dwolla fits in best is working with banks, providing these great interfaces to the banks, and then enabling all these really interesting use cases involving different funds flows and pay by bank payment methods, so that innovators, whether they're fintech innovators or large businesses that are disrupting, they can do what they need to do. We've got so many really interesting examples of customers on our platforms that are innovating both for sort of B2B flows, but also for the retail flows that we talked about that are still new in the US. We're seeing a lot of innovation there, and we want to be their partner to make it as easy as possible to work with the banks that they want to work with.
Yeah, I mean, we just saw recently Apple's announcement of their foray into the AI space.
Yeah.
And when we start talking about adaptability of AI in banking, one of the obvious areas is going to be some sort of super wallet payments capability that your personal AI will have. So for example, I could say, let's say I nickname my personal AI Albert or Alfred, right? Like from Batman. And Alfred sits in my phone. He sits in my, he's my replacement AI. It sits over the top of Alexa or Siri or whatever, and I can personify that. That seems like the way we're going with this sort of capability. And so, or even if we have, Siri, providing this, and you have your AI assistant, one of the first things we're going to see integration with is Siri being able to send your money on your behalf, like send Dave $50, Siri, right? And you don't have to worry about authentication and any of that because it's using your voice. It's on your, your device, which has got the secure element and so forth. This seems like a no-brainer that these types of abilities are going to come with the impact of AI. But again, the complexity of that from a technology capability perspective for an average community bank or credit union would seem, pretty far away, wouldn't it, Skylar? I mean, so how does Dwolla come in then and abstract that, complexity with these sort of emerging systems?
So I like the example that you provided, right? Like you could think about everyone's sort of having their own personal LLM that's trained on like all the things that are going on in their life. Maybe it has access to emails and messages, and it sort of is like seeing bills that are coming in that need to be paid and recommending how to do it and when to do it and all those types of things. I think that the innovators are probably going to be the ones who are helping to design those personal LLMs and make them available to individuals. But when it comes to the payments piece, I think it's more about how do you open up your system in a way that makes it available to the AI to
Right, that
utilize.
gateway. Yeah.
Yeah, right. How do you make that gateway available? Because you're sitting on a powerhouse of technology and services. And the real challenge is
But if
how
it's
do
not
you open it up
accessible, right,
safely.
exactly. Yeah. I get it. I get it. So, I mean, when you're sitting down with a bank partner, Dave, to come in to Dwolla's family,
Mhm.
um, I mean, how do you go through that process, particularly where there's that cultural difference or where they haven't touched those systems in a long time and they're saying, we'd love to do this, but we just don't have the expertise. It's not our culture. We
Mhm.
use this rented core and they're not being much help. And, the pricing that they've put to us to modify this is, something we can't even consider at the moment. Where do you start with that sort of, with those type of situations?
Well, you're describing the situations really well. And I think the situations are starting to fall into three categories, at least the way that we see them starting to pan out. One is that certain banks will just say, like, hey, we don't want to mess with any of this. Like, Dwolla, can you just be our partner and we'll white label your API and we'll let you kind of deal with customers. And if you bring us customers, we'll incent you and we'll make sure that your customers have a great experience. So that's one way around it, where the banks just say, like, we don't want to do it, but we do like getting deposits and help us work with our customers and your customers. The next way is where some banks are embracing trying to upgrade their cores to take advantage of some of the new technology. And there's a few interesting companies that are helping them. Companies not known for core technology, but more for like interfacing with the core, but still behind the bank software. These are companies like Finsley and Braille and Alacrity
Right.
are some interesting innovators in that space. So we're working with them to figure out how can we create great payments gateway interfaces to their software so that they can bring that to the banks that they're working with. And then I'd say thirdly is probably the big banks, like the really well-known, like the top 10 or 15 banks. Most of them are trying to build everything themselves. So they're trying to build everything themselves, but still have partnerships with fintechs like Dwolla. So we find that an interesting space where I think what's happening there is what we see is like customers get to decide, right? So these big customers working with the biggest banks, they're going to decide, do they want to work with the bank and have an all-in-one stack with a single bank? Or do they want to work with an integration provider, an innovation provider like Dwolla that allows them to get that stack and interface to their one bank, but maybe they need to interface to other banks as well. So we give them that opportunity to work with multiple banks in those cases. So, there's 3 or 4 models that we see. And the way we've positioned our tools and our open banking platform is that, we can provide that one-stop shop to work with any bank you want to work with in the US.
Very cool. Well, here's the thing is it also is a bit of a team sport these days in terms of these transformations. There's obviously many different players in the space right now. Apart from FedNow, you've got players like Plaid and Stripe and others that are involved in elements of this, as well as sort of, competing attempts from banks with, the likes of Zelle and others. But Skyler, how do you build out a capability that enables you to plug and play different players, and what could others in particularly bank partners learn from that in terms of the way they have to think about their tech stack moving forward?
We rewind the clock, let's call it 15 years ago. The technology that was available to us to build software was, cloud technologies emerging, but you still have to kind of configure and build it yourself. There's a lot of maintenance that's occurring. People are planning big infrastructure migrations to the cloud and things like that. Let's fast forward now to where we are today. Much of our technology is completely serverless. It's very easy to get services stood up and build API gateways and build connections to new infrastructure. And so if you're able to pivot your engineering and technology teams to take advantage of the latest advances in cloud computing, whether that's a private cloud or a public cloud, what you can do is build a way that it's very quick to have a simple API gateway. And behind that, it's connections to all kinds of financial institutions, open banking platforms, and other kinds of payment providers. And your developers can be writing simple wrappers around those things and embedding it inside of your technology stack. And on top of this, AI that we just talked about just a little bit ago is just going to keep speeding this up, right? So
Sure.
you can imagine AI helping write code that lives inside of simple containers and connects to these new integrations into your software platform or API layer. And that's a part of the strategy of what we're building with Dwolla. So, I think it's keeping your eyes on those emerging trends in technology and thinking about how you can leverage them to move faster and ease the integration and maintenance for your team, and really modernizing whatever tech stack or cloud that you're working on. But the continued advances in AI and cloud computing just make it simpler and simpler to deliver software for us. And as a practical example, right, when we're building connections to banks, we're able to connect a new financial institution to our platform called Dwolla Connect in a couple weeks' time. Where when we first started building software at Dwolla and connecting to banks, we would talk about integrations taking quarters or maybe even years. Now, based on API-enabled banks and the simple technology layer that we've built, we can connect to new banks in just a matter of a few sprints for our engineering teams.
So here's my question, Dave. Sorry, you follow up.
Yeah, just to abstract that a little bit further from a business sense, I think this idea of specialization is going to become more and more important, right? Companies are going to specialize in one thing, and then they're going to rely on other companies to gain access to the other things that bring value to their one thing. So if you think about like the insurance industry, as we've gotten deeper working with more and more insurance companies and insurance technology providers, we see software companies building new claims management systems or new broker management systems or new premium management systems. So they're building this really interesting software for insurance companies or insurance brokers, but they're not payments experts. Well, they don't need to be, right? They can plug into this integration the way Skyler talked about to get all the
same is going to be true for manufacturers that want to do supply chain automation and transport companies, et cetera, et cetera, et cetera.
And that's exactly what's happening. Yes, exactly.
But here's the question. You've laid out the problem set, we have on this discussion, and it's clear trajectory wise where this is going. There's going to be more automation, more requirement for integration, more technology involved in the play. But I have a question here and get your opinion on this. If you take it out 5 or 10 years from where we are today, will it be possible as a bank for you to be involved in this ecosystem without at least being integrated into the cloud?
I think everything will be integrated into the cloud in 5 to 10 years. Most things are already in some way, shape, or form today. Even the way we're talking today is via the cloud, right? Everything that we're doing is becoming cloud enabled. So there's no doubt in my mind that will be the case. Skyler and I were brainstorming with some innovator friends of ours over the last week, and we were saying, like, how far can we take this AI journey? And we could imagine that a smart designer will be able to tell its AI what kind of new services or systems they want to build, and the AI will just go, turn that into ones and zeros, and it'll be done, and it'll all be done in the cloud, right?
Yeah. But see, that in itself means that there's going to be sort of this generational shift to these new techs. And this is one of the arguments I have as to why fintechs, if you look at challenger banks like Nubank and Revolut, Chime in the US, WeBank in Shenzhen, or you look at the wallet plays, the wallet ecosystems, and so forth. The conclusion has to be that these organizations have a strong technical advantage because they're cloud native. They don't have to do any migration. And if AI comes along or quantum comes along and you want to plug it in, that's just, tapping into a new service on AWS or Azure or Google Cloud. The banks, even if you have a fairly advanced core provider, with a pretty good stack of their own, are not Amazon or Microsoft in terms of those sorts of central data center and cloud capabilities. So I do see a bit of a divergence there. But ultimately, would you agree with the statement that the players who survive this are those that just continuously innovate from this point forward?
Absolutely. It's the innovator's dilemma. Everybody has to innovate. And if you don't, you will get swallowed up. And the banking ecosystem in the US is in a sweet spot for consolidation opportunities. There's 10,000 financial institutions in the US.
Oh, yeah, there's got to be,
unlike any other country. So it's great when it comes to getting personalized service in your community, but in terms of being able to push technology advances forward in the banking system, those 10,000 banks are going to provide friction if there's not more consolidation and more innovation towards consolidation, I think.
All right. Well, listen, we got to wrap this and go to break. But before we do, Dave, how can people find out more about what's happening with Dwolla right now?
Well, check out Dwolla.com. We've got some cool new AI-enabled features on the site, so you can do some extensive research, and check out our LinkedIn post. We keep everybody up to speed there in terms of where we're headed and which conferences we'll be at and where we'll be in the world. So those are good spots.
And how about for both of you, if people wanted to reach out to either of you individually, LinkedIn is the best channel for that?
I think that's the best way. Please do.
Okay, great. Well, Dave Glaser, Skyler Nesheim, thanks for joining us and giving us an update on Dwolla. It's great to have you guys back on the show, and sounds like you guys have your work cut out for you.
Thanks, Brett. We do. We'll get back to it.
Thanks so much. Look forward to talking soon.
So go and check out Dwolla.com. That's DWOLLA.com. And to find out more information or follow them on LinkedIn. Let's take a quick break. You're listening to Breaking Banks. I'm your host, Brett King. We will be back in a moment.
This show is brought to you by Alloy Labs. As much as we love talking on the show, we believe that action is more valuable than talk. Alloy Labs is the industry leader in helping fearless bankers drive exponential growth through collaboration, exclusive partnerships, and powerful network effects that give them an unfair advantage. Learn more at alloylabs.com. Alloy Labs, banking unbound.
So you've been in the event business now for close to 20 years.
Uh-huh.
You know, part of that early team with Money 2020, part of the early team with FinTech Meetup. You're playing this game, but I've got to know, right? What happens in Vegas does not stay in Vegas on Breaking Banks. What is some of the craziest, that you've seen? Because you've got to have witnessed a ton of craziness at these events.
Yeah, I've definitely seen a lot, and there's probably many more stories that I can't say that are inappropriate for a general audience, but I want to be family friendly. So there definitely been times when like like I had the CEO of a public company come off stage, with the lav mic, and then he goes off and runs off into the bathroom, and I'm
That is
literally,
one of my greatest fears as a speaker, by the way. Like
yeah.
I take that thing off. Like I always worry, like it goes on and you hear waterfalls.
Yeah, I literally ran from that desk. I was like, "Hey, let me get that back from you. You don't need we don't need to hear all this."
Oh man. I'm curious, has anyone ever fallen off stage? Like, or
So
out of a chair?
we have we have had people fall. So I literally had we had our team picture, and someone
Yeah.
fell off the stage on the team picture because the photographer told us to go back, and then someone fell off. It was not not good, but and
Oh man. Well, speaking of inappropriate, this might seem like an inappropriate question past someone in the event business, but it seems we were just trying to plan our annual member meeting for next year. There is at least one fintech oriented event like every single week year round, like with the exception of like the winter holiday and 4th of July. Like mercifully, there are no fintech events then. Are there too many events?
Yeah, that's a great question. And the way I sort of think about it is like there are, what's the purpose of an event? Like it's to learn something. It is to meet like-minded folks, potentially tackling the same issues. It's to meet new companies and network. And and you're right. Like sometimes, like I look at the calendar, I'm like, do we need all of these? And it's and the way I sort of think about it is like, I actually like, I think about it like almost like a forest, like that there's because there's no barrier to like growing a tree or growing to a plant. There's a lot of plants, and then what happened, like for example, with the pandemic was the pandemic came and like wiped out that all the trees were cut down.
The forest fire has come through and has cleared the land.
It has, and then what right after the event, then some of the trees were able to have still like shoots, and by that shoots I mean like they had like some kind of digital thing or something like that was able to keep a community going through the pandemic. And then post-pandemic, the first couple of years, it's like there were some big tall trees, and then everybody sort of went to those big trees, and now we're back at a point where like there's a lot more plants coming up, and so it went from no trees to a couple of big trees, and now back to like a broad forest. And the question, it's a valid question. I find myself like being much more skeptical when I'm asked to join an event.
Well, so with that in mind, right? Like, so events are made to make money, right? It's why Money 2020 was purchased, right? Nicely for you. FinTech Meetup was recently purchased, right? Like, so you can't not monetize it. So how do you think about differentiating in a world where it isn't just about like how much, speakers that are like doing pay to play, rarely deliver. Can end up with too many stages and too many logos all kind of crammed in. How do you actually find a way to differentiate and deliver that value?
Yeah, that's a great question. I think like if a couple of things like so going back to to 2012 2011 12 when Money 2020 was built, like there were other existing events too at that time. But the thing was that their definition of innovation was different than, for example, at that time, like Google Wallet was coming out. Then you had like, MCI, like you had so many different like new platforms on mobile. You had new things happening with data, and they weren't being adequately covered. So there was a market need for something that brought the appropriate people together, and so we capitalized on that with Money 2020. And then and obviously that business is has been doing great and growing, and now I think we're sort of at a point where to your point that there's so many events. I do feel like there's a big there's a huge desire and need to maximize, to improve our return on time when we're at an event, and to make it worthwhile. And so whereas in the past you could have hoped on like serendipity and bit of luck, our view is, can we use technology to, maybe shift the odds in your favor of actually meeting the right person, of meeting the right company, of achieving your goals that you set out when you signed up for the event.
Well, and it feels like I love the analogy of the forest fire, kind of needing to clear out some of the trees of, call it not just the conferences, but the habits that we do by rote, because that's how business was done, which was so much in person, right? But it's replaced with now, I feel like we're all inundated because we can hop on a Zoom, and your day, like your work happens after the work day because the day is taken up by Zooms and Teams meetings, right?
Yeah.
And which makes the conference even more costly, because I love the phrase, the return on time.
Yeah.
When an organization thinks about return on time, how should they think about who to send? Because I don't know that a whole lot of thought necessarily goes into that. So you, as like a professional conference goer and attender,
Yeah.
how do you think about like what you're putting together? Who's the right audience for that?
Yeah. That's a great question. I don't think companies think enough about that. They're just like, okay, who wants to go, but that's not necessarily the right person or people. I think first of all, like figuring out like what are the business objectives. Like, are you looking to create new partnerships? Are you looking to hire people? Are you looking to socialize a new product? Depending on who or what those goals might be, requires different levels of seniority, requires different levels of function as well too. So like, whereas like if you're going to an event with a lot of let's say technical solutions, and if you don't bring someone who understands the technology,
like fintech DevCon, right?
Yeah.
Like CEO not most appropriate to maximize, from what moves built disclosure, we're investors, but it's like, they've built something that it's technical content actually.
Absolutely. That is a perfect example. And like, so like I myself, like I was an engineer, so I can understand that. So, but if you have someone who can appreciate that, then I think it's a big miss. From a seniority perspective, I also think that like, having someone who has the right level of detail for the conversations that you're thinking about, like if you are looking at let's say socializing a banking as a service solution or socializing an identity solution, like it probably might make more sense to have the product person there, who can speak to sort of broadly how it could fit into different use cases. Whereas if you're if you're not at the appropriate, like you know, if you're too high up, like it's going to be lost in the weeds, and if you're too much in the weeds, then you're not going to be able to sort of navigate and adapt to how the conversations might go.
Corey LeBlanc, one of the founders and CTO at Locality Bank, he would tell me his least favorite time of the year is when his bank CEO would come back from an event and just hand him a bunch. His previous,
Yeah.
just to be clear, previous CEO would come back from an event, hand him a bunch of cards
Yeah.
with very little context and not understanding, kind
Yeah.
of where they fit in the ecosystem. He's like, and then I'd have to spend 2 to 3 weeks with my team trying to figure out who are they, what do they do, and do we care?
Yeah. Another, like, so I was, you know, I used to be at Citibank many years ago, and you know, similarly, it was like, if you don't have that appropriate context, like, you know, for example, is it a SMB solution? Is it a consumer solution? Is it, you know, so you're gonna waste a lot of time, and no, that's a great example.
Yeah. One of my other favorites like that, Matt McCallis at Emprise Bank. I was surprised at FTMU this year
Yeah.
how many people they brought. And I'm like, for part of the banking as a service team, plus, the CEO of a, good sized bank and some others. And he goes, well, we each have different purposes, right? Like the BAS team is here doing, biz dev, right? Part of the ops team is here to actually go do due diligence and look for new vendors. He goes, but some of these other people are on our delivery side, and I want them to see what fast looks like by being exposed to a bunch of startups. But one of the things I loved about that is he was very clear about what he wanted like, it's not, we're all just going to Vegas.
Yeah.
It is, hanging out at the Venetian is fun and all, but they each had a different purpose, and it was a clearly stated purpose.
That I love that. And another thing that I've seen companies do is that post event, like all of these individuals will need to have like almost like a debrief or like a page write-up or some kind of a write-up of what they've seen. And I think that also I think that sort of makes you take it more seriously, that like you're sort of helping that group intelligence, and like what you're like, let's say like you're just looking at the speed elements of it, like key in on that and like feed that to the rest of the team. And I think that I do wish that like and I shouldn't say I do wish, but there are definitely a lot of companies that think through it in a appropriate and strategic manner. But like if you don't, then like I said, you're gonna be you could miss some things that could be vital for your business.
Any other unexpected best practices that you've seen?
Yeah, I think one, and sort of going back to even a little bit of like the post pandemic element of like how we're all living on Zoom, and we're everything's so much more decentralized. Like I do find that like when companies have like let's say some kind of networking event, they'll get like a restaurant, and then like at the end of it, they'll have everyone on their team say, okay, this is our time together, and it's actually like a great way. I found it's a great way that like a lot of these ideas are top of mind. You can put you meet someone in person versus a Zoom, and so like I think that thinking about an event not only externally but internally as well, I think as a focus point, I think that I've seen that work well.
Switching gears to the other side of the stage for a second. You also, and I know we share this same passion, which is so much content at conferences is horrible. A lot of it is because they're sponsors, right? Like, make no bones about it. Like, we're not everyone is a paid and professional speaker, and they have an agenda, which is to sell things, right? Does not make the most engaging content. What have you seen that really kind of nails it for these speakers, that they both get the business value they're paying for,
Yeah.
but also, contributes to the greater knowledge.
Yeah, I think a couple of things come to mind. Like, I act, and both you and I, we've spoken at so many conferences and done so many prep calls, and like you want to have your speakers feel comfortable, but I think that there's definitely a huge value in feeling uncomfortable as well. And you don't want everyone to sort of feel like, oh, I can go on to my speaking autopilot and like sort of just say what I'm supposed to say. I think that whenever you can actually get someone to say what they're really thinking as opposed to what they're told to think, it's like the audience knows that. And I think like I found that that's also the time where you could do follow-up questions and like really I think really create something special versus something that quite honestly you could just like read read on a web page or something like that.
So bringing this home, FTMU pioneered this idea of the speed dating, and we reside now in a world oversaturated with content. What do you think the future of content really becomes? Like, what's up your sleeve in terms of the next level of innovation?
Yeah, I mean, I think a couple of things that that is important to us is that you know that like say for example a panel, you have a panel and you can assume a lot of people think that a panel is easy, right? And they'll but if you have the right moderator who can ask things or frame things in a different manner, or to get people off of their their regular zone, I think that tends to get people to reveal things that are going to be interesting. It's also that this is like really super hard. It's like creating the right culture where people feel open, and I'm actually really happy about that. Like the first couple of fintech meetups that we've had, we've had that environment where it's people feel comfortable and say like they're in a safe zone where they can express things, versus having to feel like that you're in a that you need to be in front of the bright lights, and like it's obviously bright lights, but we don't need to be so bright. Like we wanted, so it should feel like you're in a living room, not underneath like an inquisitor or something like that.
Yeah. Well, all fantastic advice as people are ramping up for the fall season and budgeting for the spring season for conferences, how to maximize the value. It is great to have you on the show after too long of a hiatus, Sanjeev.
Thank you very much, Jason. Really appreciate it.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.